Hello everyone, good morning and welcome to today's session. So today we are going to continue chapter 8. Remember in the last session we discussed in detail about the chapter 8. We discussed about essay 800, how it is different from the normal scenario essay 200 to 799. So how they are different, what they are catering to in detail, like they are catering to special purpose framework, financial statement prepared as per the special purpose framework, and audit of those financial statement. Then how we need to apply certain concepts when we are dealing with audit of financial statement prepared as per the special purpose framework. So at that particular point in time, few things that we need to take care about. Okay, consideration when planning and performing such audit, like still all the essays, to the extent they are applicable, they will be applied. So there is no kind of different set of standards for special purpose scenario. No. So for audit of financial statement prepared as per the special purpose framework, okay, all the essays will be applicable until and unless the essay is not applicable in its entirety, means it is not applicable. Okay. However, certain terms, certain areas, are modified to the extent, to suit up the requirement of that particular engagement. For example, materiality. Now, usually materiality we see from the point of view that, okay, what will be material for the users of a financial statement? Now, when we are auditing a financial statement prepared as per the special purpose framework, the materiality and the users changes. Wherever there was a professional judgment, that might change. So, all those areas where the professional judgment was involved, okay, with respect to the users, that will definitely change. And one of the area was materiality, that we need to now consider what is material for that user, for which the audit is being carried out, or at the instructions of that user, audit is being carried out. Okay. Same way we discussed about other areas also, communicating with those type of governance that might not be relevant, because it may happen that those charges governance might not be part of that. Okay, then we talk about essay 700. We refer to point 3.3 on page 7.19 of chapter 7, that minimum items to be reported as per essay 700 in your audit report. What are the minimum contents that should be there? Additional reporting considerations we saw with respect to the applicable financial reporting framework, alerting the readers that this is prepared in accordance with the special purpose framework, and the restriction and distribution of use. Along with this, we saw a practical example, a practical report wherein the statements were prepared based on a special purpose framework. Okay. Any doubts till now? Any doubts? Okay, there is one doubt with respect to reporting on the internal controls. Okay, now what is scenario? I will also come up in SS 805 on this same topic. Okay, but just to give you a glimpse, Shutri, that when we are auditing the financial statement prepared as per the special purpose framework, we do not issue an opinion on the effectiveness of the entity's internal control. We do not issue opinion on the effectiveness of the entity's internal control. The reason because that when you prepare financial statement as per special purpose, the day-to-day operations are still being carried, and the day-to-day control performance and everything still being carried for the general purpose. You are not modifying all of your processes for the special purpose. Understand that. Everything is still being carried on for the general purpose, and that's why we do not issue an opinion on the internal controls, effectiveness of the internal control, because once you set a process, you set a process. You cannot say that, okay, this process is also applicable for general purpose and is also applicable for special purpose. No, a control is a control. designed in a way either it can give a comfort on one side or another side. That's it. So that's why if an opinion has been issued on the effectiveness of the internal control for the normal or general purpose financial statement, then reusing that control and saying that it also provides comfort on the special purpose will be wrong. That's why we do not express an opinion on the effectiveness of the entity's internal control. Any further doubt? Any further doubt, guys? Okay. No? No issues. Let's discuss the next topic, that is SA 805. Special consideration, okay, with respect to audit of single financial statement and specific element or account or item of a financial statement. Okay. So now when we talk about SA 805, okay, what SA 805 deals with? SA 805 deals with audit of single financial statement or a specific element. Single financial statement or a specific element. Okay. For example, you are auditing only balance sheet. You are auditing only P&L. You are auditing only cash flow. Okay. So when you audit only a single financial statement or you audit these, specific items. For example, you are auditing only current assets. You are auditing only kind of, fixed assets or the asset side of the balance sheet, income side of the P&L. That's it. In that case, SA 805 comes into the picture. Okay. Again, this SA 805 deals when, there is an audit of a single financial statement, specific item, account or item of the financial statement. So it can be an account also. Okay. So to that level. Now, where this essay will not apply. Okay. This essay will not apply to the report of the component auditor issued as a result of work performed on the financial information of a component at the request of group engagement team for the purpose of audit of group financial statement. Means what? Let's say, for example, there is a component auditor. Okay. I'll just show you with an example. Let's say there is a ABC Limited, which has fully owned subsidiary PQR Private Limited. Okay. Now, Mr. or you can say, let's say ABN Company stat auditors of ABC Limited requested PQ and Company stat auditors of PQR Private Limited to to perform additional audit of revenue from services. Okay, hypothetical example. Okay, so ABN Company requested PQN Company of stat auditors of PQN Limited to perform additional audit of revenue from service. Okay, for this purpose, the description of audit procedure and materiality was provided by ABN company. Okay. Now, here you might say that, okay, there is a specific element, or you may call it item of financial statement, that is revenue from service. Now, this revenue from service is being audited by PQ and company, okay, as per the instructions provided by ABN company. Can I say this whole scenario falls under the category of my SA 805? So to say this whole scenario falls under the category of SA 805, okay, there are two things that makes it out of the scope of SA 805. So as of now, this scenario not included in SA 805. Understand the reason why. Number one, okay, this is already covered by, this particular is already covered by your SA 600. This is somewhere already covered by SA 600, that is using work of another auditor. Number two, this work is being performed, okay, at the request of ABN company, okay, and this work is being performed, by the directions given by the ABN company. So that's why this essay will not apply when a component auditor issues, a component auditor issues a report as a result of work performed on the financial information of the component at the request of the group engagement team. Now, if this is at the request of the group engagement team, then it will not be counted as a part of SA file 805. Because this specific element this being audited at the request of my AB and company. Understand? If I am performing any task at the request of the group engagement team, I will not count that particular engagement under the scope of SA 805. So I'm first talking about exclusion of SA 805. That's it. Clear? Any doubt with this? Vice versa is not possible, Shruti. It will never happen. Any doubt till now? I hope this is clear. Okay. Along with me, guys, how will I suggest is take the notes, use your study material, okay? Take the notes with me, and simultaneously we will cover the study material also. We will prepare our notes also, and by this way you will be able to complete the topic or chapter also for all the topics. Clear? Any doubt? Any doubt, guys? No? Okay. Let's proceed further. Now, when I talk about SA 805, as I told you, SA 805 deals with special consideration in applications of SA 100 to 700 series to an audit of single financial statement, specific element, account or item of financial statement. Okay. So this essay is not something again, like, okay, this is providing a special, what do you say, kind of set of standards. No, no. This essay clarifies that how to apply, okay, essay 100 to 700 series. Okay. Now, essay 805, okay, deals with, that how the other essays will be applied in this scenario. So there is one doubt that, for example, if Supreme Court ordered SEBI to present a report on a particular group of companies, and if SEBI appoints auditor to conduct, to present the report, then will SA 805 be applicable? Answer is no. Two reasons. Number one, when such kind of scenario happens that SEBI is asking any auditor to present a report, that is an investigation, not the audit. Whenever I talk about till SA 810, I am talking about audit where you issue a reasonable opinion, reasonable assurance, an opinion that in all material respects, the financial statement, whether special purpose, single items, specific items, in all material respect comply with the framework or are true and fair. Give a true and fair picture. So don't forget that the audit, it's still there, and I am only talking about reasonable assurance. We are not investigating. We are not doing a forensic accounting. We are not doing fraud investigation or any other kind of investigation to present a report. No. At the end, at the background, it's an audit, but with a limited scope or changed scope. So SA 800, the scope was bit different. SA 805, limited scope. Understand that point. But the audit is still there. Clear? Now, another question is, for specific item, single financial statements or account or item of a financial statement, do we need to have that item prepared as per the special purpose or general purpose framework? Like we saw in SA 800, SA 800 is only applicable when we prepare financial statement as per general specific purpose framework. For SA 805, both are allowed. Both are allowed. Special purpose is also allowed. General is also allowed. So it doesn't matter that which framework is being used. So prepared in accordance with general or special framework, both are there. You can say kind of a framework neutral standard. Okay. But when a particular statement is prepared as per special purpose framework, then you need to apply SA 800 plus 805 both. Okay. So to summarize, let's say FS, they might be prepared as per general purpose framework. Okay. In that case, SA 200 or 100 to 700 series, generally we say it like this way, plus SA 805. Okay. If we are auditing a specific single item, single FS, or specific element, then, however, if this single FS or specific item is prepared as per special purpose framework, in that case, we need to apply SA 100 to 700 series plus SA 800 plus SA 805. So one more SA will come into picture because this is special prepared as per special purpose framework. And for all the special purpose framework things, we have a SA 800 for us now. Okay. So this we already saw that SA 805 does not apply to the report of component auditor. Okay. You can refer the example. Refer example of AB and company and PQ and company. Okay. For more understanding. Now, what is single financial statement? We saw like balance sheet, P&L, or cash flow statement, changes of statement, changes in equity, statement of changes in equity. What is the element of FS? Element means trade receivable, cash and bank balance. Is the element of a financial statement, one single line item. Okay. A specific account can be a specific account. So no need to explain this particular area because these are pretty much explainable, like, element of financial statement or a single financial statement. Pretty much simple. You can directly refer to the examples which are given over here. Okay. So you will be able to understand what is the scenario. Shruti, I'll come on that part. Just as of now, park the internal controls with respect to that. I'll come on that part. Don't worry. Okay. Now, what are the specific considerations when we are accepting such engagement? Now, see, as I told you, SA 800 and 805, they only tell you how to apply 100 to 700 series in these scenarios. How to apply. So again, the way we saw differentiating factors with respect to SA 800, how the SA 800 was, just bit modifying our existing standards. Same way, we will see now how SA 805 modifies, our existing standards. So first, when we are talking about, client acceptance and continuation. Okay. Now, whenever we are performing an audit of a special item or a single financial statement, we have to still comply with SA 200. It's not there that we are not required to comply with the ethical requirements. Independence, no. So auditor is still required to comply with the relevant ethical requirements. Okay. Independence relating to the financial statement or audit engagements, and all essays relevant to the audit, these are still applicable. As I told you, all relevant essays will be applicable. So there is no exemption in that as such. And only a essay will not be applicable. Okay, only the essay will not applicable when the whole essay, the entire text of the standard is not applicable. Okay, if the entire essay is not relevant or the requirement is not relevant, okay, then only that essay will not apply. Okay. So auditor has to comply with each requirement of essay unless the entire essay is not relevant. Okay. Now comes with respect to understanding the entity and its environment, or understanding entity's internal controls. Okay, and talking about performing risk assessment. See, when I talk about SA 805, I am talking about single financial statement specific items. Now, for to audit a specific item, I might need to look at that particular area only. Okay, so for that, it's not necessary that I need to take an understanding of the whole entity and whole of its environment. No. When I will perform audit of only revenue, why I need to take an understanding of the bank and cash, fixed assets, inventory, liabilities? No, might not be required. Okay, in such a case, my understanding will be restricted to that particular area only. My understanding of the entity will be restricted to that particular area only, and I may not have an idea about rest of the areas, rest of the what do you say, accounting line items or elements, or specific items. In that case, uh, you know I cannot just say that, okay, I have the entire understanding. No, I don't. And as per SA 315 or 330, I need to modify it accordingly, and I need to apply it to that particular financial statement item. Okay. So generally, in those cases, we need to take understanding of that particular environment. Auditor might not have an understanding of the whole financial statement or whole of the kind of company or its environment. Okay. So again, my application will be understanding will be till that particular area. Now, coming to the points with respect to SA, different kind of essays. So let's say, for example, essay 570. Now, if I talk about essay 570, okay, then what will happen is, let's say, going concern. How can you report on going concern when you are auditing a specific line item or a specific item? How can you report, on going concern by seeing just one single area? It's very difficult. It's not possible. Correct. So, in those scenarios, okay, in those scenarios, now a requirement may be relevant, but may not be practicable. Okay, because of the effort required. Okay, then in that case, okay, auditor needs to understand what will be the impact of not fulfilling the requirement on the opinion. For example, as I told you, SA 500, 570. Now, to check the going concern, I need to check everything, but I was only appointed to audit a single particular specific items. I cannot report on going concern. So I need to check with management, okay, the effort that I am putting to audit the going concern assessment prepared by you is equivalent to auditing whole financial statement. In that case, either change the type of engagement, or I need to consider the impact of not reporting as per SA 570. So, in case of an audit of a specific element of a financial statement, certain SA requires audit work that may be disproportionate to the element being audited. Okay, example SA 570. Okay, classic example is SA 570. Because complying with those requirements may not be practicable because of the audit effort required. And if the auditor concludes that the audit of a single financial statement or a specific element in accordance with SA may not be practicable, the auditor may discuss with the management with another type of engagement that might be more practicable. So you need to understand the impact. So okay, all the existing assets are still applicable. But having said that, you need to understand the impact when you are auditing a single financial statement or a single element of that essay on that particular audit of single statement. Clear? Any doubt? Any doubt, guys? Any doubt? No? Okay. Now, as I told you that, all the essays are applicable. All the essays are applicable. Now, the thing is, let's say, for example, essay 210. Essay 210 talks about that whenever you are going to an audit, okay, you need to check whether the financial reporting framework is acceptable or not. So essay 2010 requires the auditor to determine the acceptability of the financial reporting framework. It can be your special purpose framework, it can be your general purpose framework. Okay. In that case, okay. Now, when we are auditing a single financial statement or a specific item, okay, I need to understand which framework is being applied to that particular line item. Okay, to that statement. And I need to understand that after applying the framework, whether the presentation and the disclosure of that line item, that single financial statement, the way it appears is accurate or is appropriate or not. It should not happen that after applying special purpose framework, okay, the thing which I am auditing as a special single financial statement or specific element or an account or item of a financial statement conveys or discloses wrong information or misleading information. It could happen. Okay, so that's why you need to understand, okay, that a single financial statement or a specific element, how that element is appearing after complying with the that special purpose framework or a financial statement framework, whichever is applicable to that, and whether adequate disclosure is there or not. So SA 210 generally requires acceptability of the financial reporting framework. Okay. Now, whether the application of a financial reporting framework will result in the presentation that provides adequate disclosure to the intended users to understand the information conveyed in the financial statement, okay, or the element or the effect of material transactions. Okay, if yes, then fine. If no, then it's a problem for us. Then we need to go and check that, okay, if application of a framework misleads the disclosure, what else can be done? Okay. So if you guys have any doubt at any point in time, do ask. See, these two standards, SA 800 and SA 805, a lot on the side of professional judgment. Because these are special considerations, there is no straight direct answer to a particular scenario. Okay. See, as I told you that these are the special considerations. Okay. So these standards are such in nature that they can be applied to any special case. For that, if you want to apply something to any special case, they are, they will be judgmental. They will contain, that much, level of professional judgment scope within them. Otherwise, you won't be able to apply this particular standard. There could be a lot of different scenarios. Auditing with special purpose, auditing with single items, multiple single items, combination of items, a lot of things could be there. That's why you will find more of a judgmental side, where, a lot of professional judgment is involved in application of a standard, but that's the only way, okay, to cater these areas. You can do that. Yes, yes, Mancha. So you guys can also read the implementation guide. But again, as I told you, these standards, are kind of being discussed for the first time. So it is bit, obvious that you might feel this, some confusions. You might not be able to get at the first instance. Trust me, these are something new. Okay. Over and above your normal audit, you might not have heard, you might not have worked upon these standards. That's why I am, trying to explain in that much detail. Okay. And I'll request you guys also to pay focus or attention to, whatever we are discussing, so that, you can get a good base first understanding of the standard. Okay. Now, the next part is, as I told you, consideration with respect to planning and performing the audit. Simple. When you want to plan and perform the audit as per SA 805, or plan and perform the audit of a single financial statement, or a specific element of financial statement, the only thing you need to see is that you need to comply with all the relevant assets. So the auditor shall adapt all the assets relevant to the audit as necessary in the circumstances of the engagement. There is no exemption. Okay. So you need to understand that, what are the assets that are applicable to me. For example, SA 299, joint auditor. It might not be applicable, so we'll not be applying that. Using the work of internal auditor might not be applicable. Using the work of another auditor might not be applicable. So whatever is applicable, that will apply. Okay. So you need to understand and audit, okay, what assets are applicable, and accordingly those assets are required to be applied. Now coming to the materiality. How to determine materiality when you are auditing a single financial statement or a specific element. See, there is, as of now, when you are talking about, applying materiality or deciding materiality, you can usually follow a approach that is known as, deciding materiality, kind of, performance materiality, or a special materiality for a single line item. So when you read SA 320, okay, you could identify there is a requirement, or there is this, a provision in SA 320 which talks about determining materiality for a specific line item, or, kind of performance materiality. So SA 320 gives you that benefit. SA 320 already, provides that, okay, you can determine materiality for a particular line item level, or for a, particular class of items. That is possible, special materiality. Now, the same concept can be applied over here. The same concept can be applied over here. You can determine performance materiality or materiality for a specific or class of items, and that can be, applied, and that can be, adopted over here. So for that, I would suggest I'll create a reference over here for materiality. Just a minute. Also show you guys in the study material. Just give me a minute. Let me open. Just let me open that module part, and I can, just cross-reference the relevant areas so that, it will be easy for you to refer when you will refer in the future. So you can either, provide a reference of chapter 4 over here, reference to chapter 4, okay, where materiality has been discussed, or you can say refer essay 320, okay, essay 320, para 9, para 9. How many of you have gone and read the, bare text of an essay? How many of you have gone and read the bare text of the essay? Anyone? No? No one? Okay. I always, also suggest everyone to, just go and see the bare text of essay. That will be really helpful. So this is, a bare text of essay. Let's say, for example, essay 320. So when I was talking about para 9, okay, this definition, I was talking about the definition of performance materiality. That, see, just, to provide your cross reference. For the purpose of this essay, performance materiality means the amount or amount set by the auditor at less than the materiality for the financial statement as a whole to reduce to an appropriately low level the probability that the aggregate or uncorrected misstatement exceed the materiality for financial statement as a whole. Okay. If applicable, performance materiality also refers to the amount or amounts set by the auditor at less than the materiality level or level for a particular classes of transaction, account balances, or disclosure. This again, this particular point is kind of, somewhere linked to performance materiality, is somewhere also reference to or linked to SA 805, okay, that is materiality for single FS or specific element. Okay, you need to use SA 320 in order to decide the materiality for a specific element or single FS. So SA 320 already has a provision of materiality with respect to your, materiality for single financial statement or a specific items. That is known as a performance materiality. Okay. So kind of I'll just provide here. Performance materiality can be used for single FS or specific element. Okay. Mhm. Now coming to opinion part. See, till now we discussed, different essays with respect to different alterations. We talked about, acceptability of the financial reporting framework with respect to SA 210. We discussed about applications of certain essay which are not practicable. Okay. For example, SA 570, not practicable because we cannot perform, SA 570 assessment, going concern assessment when we are auditing a specific item. We discussed about, applications of essay. If the essay is not applicable in its entirety, then only we can exclude that essay. Otherwise, we need to, apply the whole essay. Okay. So we discussed few things, where a modification could come into picture. Now, the next part of the modification where where the modification is possible is opinion. And there we will see a lot of modifications. Okay. With respect to an opinion, we will see a lot of modifications. Okay. Now, forming an opinion. Again, opinion comes with respect to an engagement letter. Okay. So when we agree the terms with the management that, how we will be issuing opinion, how we will be, providing the opinion, that we agree as per SA 210. Okay. When we are discussing SA 210, we discuss, that, okay, that management has to agree. Okay. Like preconditions of audit. Remember something we discussed, that auditor and management should have an understanding, okay, their responsibility, applicable reporting framework, the form and content of the report, okay, how the reporting will be done, and opinion will be issued. So SA 210 requires that, the terms of audit engagement should include, reporting part also. And same is applicable here. And the same is applicable here. Okay. So, when we are dealing with SA 805, it says that whenever you are auditing a specific items or a single financial statement, going for an engagement letter, please make sure while agreeing with the terms of engagement or drafting an engagement letter, you make sure you include that how and in which form the opinion will be issued. Okay. How and in which form the opinion will be issued. That's the requirement to SA 210. Now, we have discussed in SA 700 also and SA 200 also. There are two types of frameworks. One, fair presentation framework. Another, compliance framework. Whenever we are issuing an unmodified opinion, again, unmodified opinion with respect to fair presentation framework. Okay, we use the language that the financial statement, okay, in all material respects in accordance with the applicable financial reporting framework. Okay, that is, or we use the term the financial statement gives a true and fair view in accordance with the applicable financial reporting framework. So when we use the term gives a true and fair view, that is a fair presentation framework. Okay. When we use the term gives a true and fair view, that is fair presentation framework. But when we use the term in all material respects, okay, in all material respects, we are using the compliance framework. So if it is a fair presentation framework or a compliance framework, the wordings will change to that extent. So when expressing an unmodified opinion on the complete set of financial statement prepared, okay, in accordance with the compliance framework, we use the term in all material respect. We already discussed that in SA 700. That was for complete set of financial statement. I'll just show you in SA 700. See, remember we discussed about this part in SA 700 when expressing an unmodified opinion, okay, on the financial statement prepared in accordance with the fair presentation framework, the auditor opinion shall, okay, include the following paragraph. In our opinion, the accompanying financial statement presents fairly in all material respect in accordance with the applicable financial reporting framework, or I'll remove this one as of now, or it should include, in our opinion, the accompanying financial statement gives a true and fair view. So one of the items should be there when you are using a fair presentation framework. But when you use a compliance framework, okay, unmodified opinion and a compliance framework, the terms which comes is that accompanying the auditor's opinion, okay, shall be that the accompanying financial statements are prepared, okay, in all material respect in accordance with the applicable financial reporting framework. So in compliance framework, when we are issuing a report as per the compliance framework, an unmodified opinion, again, unmodified, we use the term in all material respect. Earlier, we were using fairly and in all material respect. That is fair presentation framework. We use the word fairly or give a true and fair view. But when we use compliance framework, we use the term in all material respect. We do not use the term fairly or give a true and fair view. Okay. So there is a change in the way of writing the opinion. That is SA 700, applicable to the complete set of financial statement. But when I come to sorry, SA 805 specific element, the same will also be applicable. The same will also be applicable. So if I'm using or if I'm issuing an opinion on a specific financial statement or a line item based on a compliance framework, my wordings will be in all material respect. Okay. Otherwise, my wordings will be fairly in all material respect or gives a true and fair view. So same way I need to apply for a single financial statement also. And there are certain factors, okay, based on which we can decide either we need to use the term fairly in all material respect or gives a true and fair view. So when to use which term? So for a fair presentation framework, we have two options. Now when to use which option? Okay. So there is some factors which are there in picture. One, we need to see whether there is any restriction or implied or explicit to use a particular term. Okay, implied or explicit restrictions for for the framework or something like that. Then whether are we required to issue report with respect to the framework, and are we required to issue report that it has complied fully with the requirement of the framework, or it is fine if we say that it has achieved fair presentation. So we need to understand the requirement of the framework where according to which, okay, we are issuing the report. So totally depends upon case to case basis. Okay, so that was the term terms that we are using while issuing the audit report. Okay, or particularly the terms which are used at the time of issuing an opinion. Okay, now other parts of the opinion. Now other parts of the opinion, and we need to understand that one. So when I talk about other parts of the opinion, let's say key audit matters. How will you report key audit matters? If you want to issue a report as per SA 805, okay, if you want to issue a report based on a specific or single line item, how will you report key audit matters? How will you incorporate SA 701? Can anyone tell me that? Can anyone tell me that? How will you basically, okay, incorporate SA 701? Anyone? Anyone? How will you consider SA 701 when you are, auditing or issuing opinion on a single financial statement or a specific element? See, these kind of reports are usually not available publicly. Reason because these are for the specific intended users. So it becomes difficult to have these reports publicly available. Any doubt, guys? Or how will you incorporate SA 701 when you are issuing an opinion as per SA 805? So how will you report on key audit matters? How will you issue incorporate key audit matters when you are just here providing this particular detail, like you are referring to audit of a single financial statement or a specific element? Anyone? No? Okay. Now, correct, Shruti. So it will not be feasible to report on SA 701 when you are dealing with a single single line item. or single financial statement audit. That's why when we were discussing SA 210, okay, modified version of SA 210, we were talking about, that, okay, at that point in time only, we have to agree upon the form and content of the audit report. Form and content. So content will discuss what paragraphs to be included, whether SA 701 will be part of that or not. Through that, we can, like at that particular point in time only, you decide whether these will be part of your audit report or opinion or not. Okay. And then only once you discuss, in that way, you go forward. So SA 701 might not be applicable here. Again, SA 701 is only applicable to the listed entities, first of all. Number two, if you are auditing a single financial statement, and when you see SA 701, okay, it says that, I'll show you SA 701 what it says. It's applicable to the audit of general purpose financial statement of listed entities. See, this is SA 701. Applicability. Okay. So SA 701, this SA applies to the audit of complete set of general purpose financial statement of listed entities, circumstances when auditor otherwise decide to communicate key audit matters and required by law. Again, important point to note is the complete set of general purpose financial statement. Complete set of general purpose financial statement of listed entities. Okay. This is not the complete set of general purpose financial statement. That's why SA 701 will not be applicable. So if you talk about SA 701, not applicable, and I will provide a reference to this one, that is page 7.23, chapter 7. Okay. So you need to see whether a SA is applicable to only general purpose financial statement. Same way, SA 701 will also not be applicable to the special purpose framework, because it's applicable only to general purpose. Unless and until it is required by law. So there are two areas, see over here. Unless and until it is required by law, these two one. Or auditor otherwise decide to communicate. So, listed entities, circumstances when auditor otherwise decide to communicate key audit matters or required by law. Okay. So, you need to think of all these conditions when you are, issuing an opinion or deciding in what form the opinion is required to be issued. Okay. Now, rest of the paragraphs again are required to be seen in line with SA 700. Okay, SA 700 already gives you a structure that how to issue an opinion. Okay, so you need to follow SA 700 with respect to the opinion. Now comes a very important part, that how that opinion is presented. Okay, how that opinion is presented in the whole that is report that is published or a financial statement, how it is presented. Now, if the auditor concludes that okay, the financial statement which are there, like on which the auditor was supposed to issue an opinion, okay, are presented with the complete set of financial statement. Again, let's say for example, ABC Limited, okay, appointed Mr. X to audit the current assets, okay, for FY 22-23. Mr. X issued an unmodified opinion on current assets after performing an audit as per SA 805. Okay. Now, management published the complete set of financial statements together with the statement of current assets audited by Mr. X. And management published the complete set of financial statement with the statement of current asset audited by Mr. X together. Okay, together. That they were not, like not separate, but they were together. Now, I have a financial statement. I have a, a statement of current asset also at the same place. Okay. The public, the public publication of this particular, statement and everything. Okay, or the presentation. The presentation of complete set was such in nature that auditor was not able to differentiate the specific element from complete set. So they presented, or they published in such a way that the specific element which was audited was not presented separately than the complete set. Okay. In that case, let's say for example, you had a balance sheet over here, and on the next page, management provided statement of of current assets audited by different auditor. So you had balance sheet over here, you had statement of current assets, and then you have P&L on the next page. Kind of such a way that you are not able to distinguish a difference between the separate element which was audited versus your complete set of P&L, and it is appearing that this particular separate or specific element is part of complete set, okay, of FS. This appears to be like, this is presented in such a way that it appears to be part of a complete set of FS. In that case, what you would do as an auditor. Now, if this is a scenario, again, complete set is given. Along with the complete set in between, they have added a specific element which, okay, which was audited by Mr. X as per SA 805. So what you would do in this scenario? So what you would do in this scenario, if this is a scenario, like, it is presented in such a way that it appears the part of the complete set of financial statement, what you would do? Come on, guys, what you would do? Come on, guys, what you would do in this scenario? Is it fine for you if it is disclosed step, together, or you would like the management to disclose separately? And if you would like to disclose the management separately, then why? What is the problem of disclosing like this way? What is the problem of disclosing, a statement like in this way? What is the problem? Come on, guys. What is the problem over here? If I disclose in this way, if the management disclose financial statement in this way, then what is the problem? But if you see, okay, I'll show you one more thing. And this is really necessary for us to understand. In your balance sheet, somewhere you will have this particular section of current asset. In your balance sheet, somewhere you will already have a section of current assets. Okay. And that same current asset will be, shown separately as a statement of current assets. That same current asset will be shown as separately as a, statement of current asset. In that case, what is the problem? Because that will be a reflection only, okay, of what current asset are there in the balance sheet. Is it fine if management discloses in this way? Management can say, okay, I have already included current asset as a part of my, balance sheet. If I'm disclosing it again as a statement which you audited, then what is the problem? Very good, Shruti. Very good. Very good, guys. So whenever we are auditing a statement or a single specific element, we are only, when we draft our audit procedures, when we do a risk assessment, our scope is only that particular area, current asset. Now, there might be some other area in the balance sheet P&L which might impact your current asset, which you may not be able to identify because you never did an audit of, other areas. That's why, and audit. That's why an audit of, only a statement of current asset, okay, might not help you to identify misstatement which were there, like earlier in the complete set of financial statement. Okay, so when you are auditing a specific element, it is, your scope is only restricted to that specific element, and you might end up issuing unmodified opinion because you might not have identified something which was lying in other area related to current asset. For example, let's say there was a trade receivable. Everything is assigned trade receivable, but there is something in sales which might, is pointing out that your trade receivables are incorrect. So when you verify trade receivables, nothing, came to your attention that could lead you to believe that there is a problem in the trade receivables. That's why you issued an unmodified opinion. Presenting together with the complete set of financial statement will give the user an understanding that you have reviewed everything. This will give this will give user an understanding that auditor has reviewed full set of FS, and that is wrong, and that this is wrong. So this is wrong impression kind of on user, on reader. Okay, it may happen that complete set is issued by audited by some other chartered accountant, and a statement of current asset is audited by some other chartered accountant. Now the problem increases when you have a different kind of opinions. Let's say here on balance sheet or complete set you have a modified opinion, and here you have an unmodified opinion on statement of current assets, or vice versa. You have a modified opinion on statement of current assets and unmodified opinion over there. In that case, it creates a lot of confusion. It creates a lot of problems. That's why it's important that if you are auditing a specific set of financial statement, or means a single financial statement, or if you are auditing a specific item, they should be published in such a way that the auditors should be able to distinguish both of them separately. Okay. If an audited single financial statement or an audited specific element of a financial statement may be published together with the entity's audited complete set of financial statement. If the auditor concludes that the presentation of single FS or a specific element does not differentiate it sufficiently from the complete set, the auditor shall ask the management to rectify. Otherwise, it will create a hell lot of confusions. Okay. So, if single FS or specific element, presentation of single FS or a specific element does not differentiate it sufficiently from complete set, ask management to rectify. and ask management, okay, to differentiate the opinion on the complete set versus the opinion on the specific element, because you can have a different element on complete set and a different element on separate, a single financial statement. Okay, so differentiation of the opinion is also necessary. And if till the time the sets are not different, kept separate, the complete set versus the single financial statement, the auditor shall not issue an opinion. If the management is not separating both of them, the auditor shall not issue an opinion until satisfied with the differentiation. Now, let's say you are the one who is auditing single FS, and you are the one who is auditing complete set of FS. Okay. So let's say, for example, in this example, you are the one who is auditing this balance sheet. Mr. X is the one who is auditing this balance sheet. Okay. Is audited by Mr. X. This audited is being, this balance sheet is audited by Mr. X. And same way, this is also being audited by Mr. X. Can Mr. X combine both opinion together? Simple question. If complete set of FS is audited by same auditor who is auditing single FS or specific element. Okay. Now I'm talking about same year, same financial year also. Same financial year. Then can that auditor issue single opinion? Yes or no? Yes or no? I want with reason. Why do you say yes or why do you say no? If a complete set of FS is audited by same auditor who is auditing single FS or specific element for the same financial year, then can that auditor issue single opinion on both? Can he issue single opinion on both together, one single audit report? If no, then why? If yes, then why? What is the logic you are saying? When I talk about single opinion itself, you know, same audit report, one single audit report I'm talking about. One single audit report for both items. If yes, then why? If no, then why? But items are same. Okay. So if you are saying there is a same different engagement, I'm saying same FS, same items. So let's say, for example, current asset. Now, current asset is part of balance sheet also, which is a complete set of financial statement. I'm any which ways, issuing a separate opinion current asset. Why cannot I club both? Let's say I have a same opinion, unmodified opinion. Okay. I am saying unmodified opinion, same opinion, unmodified, one single audit report for items, that is an unmodified one. My opinion also is not different. I am saying yes, everything is compliant. Opinion is also same. There is no difference in opinion. Can I issue a single audit report? Can I issue a single audit report? Okay, Shruti. Come on, guys. Okay, Suraj. Come on, quickly. Yes, no. Okay, Mansha, good. Okay, so in all scenarios, or situations rather, all situations, the answer is no. I cannot. I cannot. The answer is no. Even your framework is same. In all situations, framework same, opinion same, period same, everything is same. The reason because complete set is issued, audit of complete set is done, okay, for a particular set of intended users, okay, for particular set of intended users. These users come as per company set, shareholders, okay, public at large. So you have a particular set of intended users of your complete set of financial statement, okay, that is circulated to everyone. When I talk about audit of specific element, this might be for restricted set of users or for restricted purpose or slash specific purpose. For example, you want to submit that this particular audit report of a specific element to a particular department, regulatory authority, for some particular purpose, for some particular calculation. The purpose and the intended users and the use of the audit report will differ, will every time differ. Okay. For example, regulatory, bank, regulatory authority or bank or whatsoever, etc. So here my intended users are different. The purpose of issuing opinion is different. Okay, and the use of that particular audit report and set of FS is different. Why no? Because intended users are different. Okay, intended users, then purpose of issuance and use of audit report and FS. These all three things are different, and hence no separate opinion. No, each engagement shall hold no combined opinion. Each engagement shall hold a separate opinion. Absolutely correct, Jigar. Correct, Suraj. Yeah. A creditor might be interested in the current asset or security that is given to them. Okay. So they might be only interested, a security given to them. So they might ask you to perform specific audit of a particular line item or current asset that is lying with the company. So audit of complete set of assets, statutory audits are separate, and audit of a specific item or single FS is separate. There is as such no standard name like we call it statutory audit or tax audit. Here there is no specific name. We just call it a special audit. Okay. Audit of a special element or item. Even if your framework is same, I still will not issue a combined opinion. I will always issue a separate opinion. Clear? Any doubt? Let's take a few minutes more and complete the essay, and then we'll go on the break. Okay. So, if auditor undertakes an engagement to report on a single FS or on a specific element of FS in conjunction with the entire audit, the entity's complete set of FS, the auditor shall express a separate opinion, and we just now saw why. I told you the reason why for issuing a separate opinion. Now, very important part, that is different kind of opinions. Different kind of opinions. Okay. First of all, if there is an EOM paragraph, OM paragraph, or any modification in your complete set of FS, in your complete set of financial statement, then the auditor needs to understand how that EOM paragraph, OM paragraph, or a modification is impacting that single or specific element. And if appropriate, he needs to include the same in his audit report also, if required. Okay. So when deemed appropriate, the auditor shall modify the opinion on the single FS or specific element or include an emphasis of meta paragraph or other meta paragraph in the audit report. When the auditor's report of an entity's complete set of financial statement is modified or includes an EOM paragraph or other meta paragraph. Okay. By considering the impact, we can include. Now coming to the part where there is a disclaimer of opinion or adverse opinion on the complete set. Now, if the auditor concludes that it is necessary to express an adverse opinion or a disclaimer of opinion on the entity's complete set of FS as a whole, okay, then an auditor cannot issue a separate unmodified opinion on a single FS. Okay. So auditor cannot issue a separate unmodified opinion on single FS. So I'll just write it here to summarize. Disclaimer of opinion / adverse opinion on complete FS restricts the auditor of specific element / single FS, restrict the auditor of specific element or single FS to issue an unmodified opinion, okay, on specific element / single FS. And the reason why is, the reason for this is somewhere your SA 705. SA 705 is the reason why it cannot be done. Now, if you see SA 705, we discussed about an area. Remember, we discussed about an area that was other consideration relating to an adverse or disclaimer of opinion, that when it is necessary for an auditor to express an adverse opinion or disclaimer of opinion on financial statement as a whole, audit report shall not include an unmodified opinion with respect to the same financial reporting framework on a single financial statement or one of the specific or more elements. Remember something we discussed already in SA 705, that when on a complete set of financial statement you are saying that it's an adverse opinion or a disclaimer of opinion, then how can you issue an unmodified opinion on a single financial statement or a specific item? That will be inappropriate and that will conflict your adverse opinion or disclaimer of opinion as a whole. That's why SA 705 restricts, and same way adopting the same thing, because we have to comply with SA 705. Okay, while issuing an opinion as per SA 805, we are not allowed to issue unmodified opinion on a specific element or a single FS when there is a adverse or disclaimer of opinion on complete set of FS. So if I talk about chapter 7, page 7.32. And you can cross-refer this particular part, chapter 8, page 8.13 over here. So that when you will refer, you will come to know, okay, this is coming from there. Okay, or this will impact there. Kind of cross-reference. So no separate opinion, basically. Now, there could be a scenario when you have issued, when the auditor has issued a disclaimer or adverse opinion on complete set of financial statement, but you still think that an unmodified opinion can be issued on the element. But you still think an unmodified opinion can be issued. Okay. Now that can be done, exception to above. This is exception to above. That is, an unmodified opinion can be issued when auditor considers it appropriate to issue an unmodified opinion, okay, where an adverse or disclaimer of opinion on the entity's complete set of financial statement has been issued as a whole. Only if the auditor is not prohibited by law, okay, the opinion that is expressed on the audit report is not published together with the auditor's report containing the adverse and disclaimer of opinion, separation or distinction should be there. Specific element does not constitute a major portion of the entity's complete set of FS. Otherwise, you cannot. If these three conditions are satisfied, then only unmodified opinion can be issued. Understand? If both reports are published separately, is not prohibited by law. And the third part is very important, is that the specific element does not constitute a major portion of entity's complete set. If it constitutes the major portion of the complete set, with if let's say for example we assume that okay, the specific element is a major portion of the complete entity's FS. Okay, then in that case, if you say that major portion does not contain the modification, then the adverse opinion we issued on the basis of pervasiveness that majority of the portion contains a material misstatement will be wrong. So to like when we are issuing an adverse opinion, we say that the misstatement is material and pervasive, that it impacts majority portion of FS. And on the other side, by issuing a separate opinion on a majority of portion of a FS, and by issuing a modified opinion, we say that this is appropriately fine. Then both of the opinion will contradict. This is only possible that we are giving an unmodified and adverse opinion together when the specific element of unmodified opinion is of not major portion, is not a major portion. Major portion is something else, because of which there is an adverse opinion. Are you getting my point? So, unmodified opinion can only be issued on a specific item if these three conditions are satisfied. In case where there is an adverse opinion or disclaimer of opinion on your complete set of financial statement. Clear? Any doubt? Any doubt, guys, till now? Whatever we have discussed? So the doubt is why not qualified opinion is included here? Why adverse opinion or disclaimer of opinion? Reason, because when there is a qualified opinion, you don't say that a material misstatement is pervasive. Okay. At that same time, a qualification can be there and an unmodified. When you issue a qualified opinion, you say except for the qualification, everything is fine. Okay. And that's why it's not a problem when you issue an unmodified opinion on a specific item which is not part of your qualification. But in adverse opinion or disclaimer of opinion, the concept of pervasiveness comes into the picture, and that creates a problem. Any doubt, guys? Any doubt? No? Okay. If no further doubts, then let's take a quick 10-minute break, and after the break, we'll gather back and continue the session. Okay, so let's continue the topic. Now we will start SA 810. So whatever we have discussed with respect to the single FS specific element, that was SA 805, and that we came to a conclusion. Okay. Now coming to SA 810 and how this is different from SA 800 and 805. So when I talk about SA 810, okay, SA 805 or 800s were, specific consideration to a special kind of audit. Okay, to a special kind of audit where either you are issuing an opinion with respect to, single FS or specific element, or you are issuing an opinion when it comes to the, audit of a financial statement prepared in accordance with the special purpose framework. That was your, special consideration. Now, when we talk about SA 810, that is engagement to report on summary financial statement. Summary financial statement. I will explain this with an example. Okay. With an example so that, you guys can understand in much detail what I'm talking about. Okay. This is RHP that we have already discussed in previous lecture. Okay. I told you that this is an example of SA 800, that is a special purpose framework. But having said that, this is a classic example of one more essay, which is SA 810. How I tell you. And this is more close to SA 810 compared to SA 800. So when I just, share this example for the purpose of SA 800, okay, I just wanted to explain you some elements of SA 800 through this example. But if I talk about the whole, this example is pure classic example of SA 810. Let's go to page 405. Now, if you see over here, this RHP, Red Herring Prospectus, contains independent auditor's examination report on the restated consolidated financial statement. Usually, restated consolidated summary financial statement of asset and liability as of 31st March 23, 22, 21. Now, why I use this example, in SA 800, because they restated this particular summary financial statement as per special purpose framework. That's why I referred this restated portion under SA 800. Now, but this portion, summary financial statement of from here, summary financial statement till here, this is classic example of SA 810. Okay. What SA 810 talks about? SA 810 talks about that engagement to report on summary financial statement. So summary financial statement, okay, if there is any engagement where you have to report on summary financial statement, that will fall under purview of SA 810. See, and restated consolidated summary statements of profit and loss account, including other comprehensive income. So these all are summary statements, consolidated summary statement. Okay, consolidated summary statement. Now, when we talk about consolidated summary statement, there are a few things that we need to first understand whenever we are taking an assignment on summary FS. First of all, the first thing we need to understand, okay, is that whether the applied criteria basis which we are required to prepare the summary statement is acceptable. Like, on what basis you will prepare a summary? The simple question is on what basis you are preparing a summary. For example, okay, this summary financial statement over here. Here, this is a summary financial statement. Perfectly fine. Good. No issues till now. But if I go to detail, now financial statement includes notes to financial statements. Okay. Now, when I go to notes to financial statement, I am not able to see, certain notes over here. See, plant, property, equipment, only few things are given. Intangibles, if you go below, we have a statement adjustment to the audited consolidation, then a few things, material weakness. That's it. Then we have a plant, property, equipment, note to restated FS. There are few notes, but not as per, the notes which are required as per your, what you say, full financial statement. Notes are there, notes to FS are there, but they are not as detailed as they were supposed to be there in, actual financial statement. A lot of things are missing when you will compare with Ind AS and Schedule 3. Okay. Now the question comes is that if a lot of things are missing as compared to Schedule 3 and your Ind AS, then how an auditor decides that which things are not required to be included? Okay, which things are not required to be included and which things are required to be included here? Because at the end, this is a summary, not the actual FS. This is a summary of financial statement. So how to decide basically which things to include and which things not to include? Okay, and that is known as how to decide whether the applied criteria are acceptable. In other words, okay. So first of all, we need to understand whether the applied criteria when we are accepting this particular assignment is acceptable. And that I said, things to be included in summary FS versus things to exclude. Okay, so determine things to be included in summary FS versus things to exclude. Okay, is there any way to decide that? And if yes, then that criteria, okay, this particular thing, way to decide this is known as criteria, and whether this criteria is acceptable. Acceptable means simple, that from where it is coming, like law, regulation, standard or something. Okay, so whether it is mandatory or management has given this criteria or something like that. So determine whether the applied criteria are acceptable or not, first of all. Because what you are doing in the whole engagement is you are taking up the financial statement, summarizing it, and you are showing some summary statement. Management is doing that, and you are issuing opinion on this summary part. So in summary FS, you prepare a shorter version. Let's say you have a whole standard financial statement with you. Okay, management has prepared detailed FS. Just a minute. Let's say management has prepared this detailed FS. You audited this. Okay. This is audited now. And because of a law or regulation, because of the requirement of a law or regulation, you are now asked to audit a summary FS being prepared out of this financial statement. So a summary which is derived from detailed FS. Okay, this is summary FS. Now you are required to audit this one or issue report on this. Summary FS. That is the role that we need to understand how to audit this particular summary FS in conjunction with the detailed FS. Like when you want to issue a report on summary FS, what are the things that we will take care while issuing a report on summary FS? Okay. So first you need to understand how the summary is prepared, the criteria to prepare the summary. Okay. Now, usually management is responsible for, determining the criteria. So management has to determine which criteria to apply. And then the auditor will understand, whether the criteria selected by the management or applied in the current scenario are appropriate or not. Now, in summary financial statement, generally, what you do is you consolidate, you summarize some things. Now, you need to see aggregation of information. Means, let's say, for example, there are 10 items of current assets shown on the balance sheet. In summary FS, you might once show only current asset, one single line item. Or otherwise, it may happen that instead of total assets, they only show one line item total asset. So, to which extent the summarization is required to be done? In other words, to which extent the aggregation is required to be done, okay, is very important to understand. And that's why aggregated information and limited disclosure have a higher risk. Tomorrow, let's say, for example, if I have a, total assets, okay, 1, 2, 3, 4, 5, 6, previous year, current year, previous year. Okay. For example, I have this one. Now, what summary I need to prepare of this? I can either show line item of a total asset combined over here, or else I can show two line items, non-current asset and current asset, NCA. Or else I can still bifurcate, like NCA, fixed asset, investment, or something like that. So I am still preparing a summary, but to what extent this aggregation is required to be done depends on criteria. That's why it's very important to understand whether the criteria that is used is acceptable or not. Now, there could be a scenario that when I'm summarizing it, I'm only giving one line item. Okay. This could lead some misstatement. Or let's say, for example, when I'm summarizing total asset, I am excluding certain things which have a negative balance, like negative debit balance of P&L that I'm taking towards the liability side, or something which has a, kind of, debit balance on liability side, I'm taking it to the asset side to increase my total assets. So is there any adjustment, reclassification done for the summarization? Then how it is done, why it is done, what is the criteria? so that it should not be a misleading. Okay, it's very important for us to understand the criteria that is used and whether that criteria is resulting in misleading information. So basically, summary financial statements by their nature contained aggregated information and limited disclosures, and there is an increased risk that they might not contain the information necessary so to as be misleading in the circumstances. Okay, that's why it is very important to understand the criteria that is used, okay, for the preparation of summary financial statement. And when the criteria does not exist, there's a higher risk even. So criteria decides your risk, kind of. Basically, there are certain factors which determine the criteria, which help you to determine the criteria. That is the nature of entity, purpose for the summary financial statement, information needed to the intended users, and whether applied criteria result in summary financial statement that are not misleading. These four factors are the important ones which help you to determine whether a criteria is acceptable or not. You can write it's very important. In our example, first, the nature of entity. Okay. So it's a public limited company. Nature of entity. Second, intended users. The purpose of summary financial statement. In our case, the purpose is so that this can be included with, if you see over here, the purpose paragraph. Over here. Our report is intended solely for the use of board of directors for inclusion in the offering documents to be filed with Securities Exchange and Board of India. Securities and Exchange Board of India, SEBI. So that is the purpose. Okay. Now that's the purpose. Then information needs of the intended user. Now, who is the intended user of this financial statement? Number one, SEBI. Number two, the people who are going to invest in the company by reading the RHP. Those are the intended users. And what information is required by these users will decide the level of aggregation. Fourth, whether applied criteria in summary financial statement are not misleading, means after summarization of a financial statement, whether the financial statement is appearing misleading. If yes, then the criteria is not good, or the summarization way is not good. Clear? Any doubt? I hope you understand why determining the criteria, whether the criteria is acceptable or not, is very important and critical for the some audit of summary financial statement. Because if you go wrong here, then there is no saving. You are messed up. Reason because when you even are not able to, you have selected a wrong criteria, or if you are given go ahead to a wrong criteria, doesn't matter what you do a planning, you do a risk assessment, everything is going to be incorrect, misleading. Same way, this requirement also comes from that SA 210. SA 210 says that you need to understand whether the financial reporting framework or accept criteria, or the criteria on the basis of which financial statement are prepared are acceptable or not. And the same is applicable to the summary financial statement. Now, how can you decide and how can you get it, approved the criteria? See, if you want that the criteria should be well defined before in start of the engagement, you need to make sure that you engage that disclose, enumerate that criteria in your engagement letter. Okay, you enumerate that criteria in your engagement letter. Make sure that your criteria is listed in your engagement letter. Now the question comes is, when such criteria is not present, then what to do? Such criteria is not present, or we are not able to agree with the management what criteria should be used or how the summary should be prepared. In that case, simple. Do not accept the engagement unless required by law. So, if applied criteria are unacceptable, or we are unable to obtain agreement with management on applied criteria, not accept the engagement unless required by law. Now, if let's say, for example, it is required by law, then what? If that is required by law, when say, let's say you don't have a applied criteria or management is not agreeing to applied criteria, which is good, okay, which is not misleading. Now, you are not able to obtain agreement with management and you are still required by law to perform the engagement. In that case, what to do? I'll explain you with form a chart. Let's say your first of all point is determine the applied criteria is acceptable. Okay. If you are able to determine, okay, let's say for example, if no issues, then we will proceed further for the further audit. But if you say that the applied criteria does not exist or is not acceptable, okay, then what you need to do is request management to change applied criteria. Now there could be two possibilities from here. One, you get an agreement with the management, so management agrees. If management agrees, everything is fine. So management agrees. If management agrees, same, it will go like like no issues are there over here. So no issues are there. It will be like in that way. Fine. What if management does not agree? In that case, you need to check whether required by law to perform engagement, whether required by law to perform the engagement. It could be either yes or no. If it is no, then do not accept the engagement. But you are bound by law to perform the engagement. In that case, the engagement and reporting will not be as per SA. Reason, because SA requires you to use the applied criteria which is acceptable. But if you are performing an engagement, and the applied criteria is not acceptable, and still you are issuing a report on such summary FS, then that is not as per SA. And 8, if that reporting will not be as per SA, then auditor is required to specify the same in audit report. Simple. So if auditor, is issuing a report still, which is required by law, over an applied criteria which is not acceptable, then please mention that this engagement is not as per SA, and the auditor is required to mention the same in his audit report that the engagement which has been performed is not as per SA, because the applied criteria is not acceptable, and we have are performing the engagement as required by the law. Okay. So accordingly, an engagement conducted in accordance with such laws or regulation does not comply with SA, and auditor's report on the summary FS shall not indicate that the engagement was conducted with the SA in accordance with SA. An auditor is required to include appropriate reference to these facts in the terms of engagement. Okay. Now, in our example, basically, this is, where the applied criteria has been accepted. Okay. This is performed in accordance with SA because the applied criteria has been accepted. And that's why you will see over here. The restated consolidated financial statement, which have been approved by the board of directors, have been prepared in accordance with the requirements of these. So this is the applied criteria. Okay, this is the applied criteria, and this is acceptable in the current case. That's why you will not find such a statement. Then comes another second part is you need to obtain an agreement from the management that management understands its responsibility. Okay, responsibility regarding what? Responsibility regarding preparing the financial statement as per the applied criteria. Okay. To make audited financial statement available to the intended users of summary financial statement without difficulty. See, summary financial statement is a summarized form. So if a user who is receiving a summary financial statement, and if he is not seeing the audited financial statement, in that case, he might not be able to understand the summary fully. That's why, we agree with the management that management has to acknowledge and understand that they need to provide the audited financial statement to the user of summary financial statement. Also, the auditor is required to ensure that audit report on the summary financial statement is included in any document where the summary financial statement is given. So the summary financial statement should not be quoted without the audit report. First is that management understand responsibility of preparation of summary financial statement in accordance with applied criteria. Second, make sure summary financial statement user get audited financial statement without difficulty. Third, to include auditor's report, on summary financial statement wherever you are attaching summary financial statement. So to include auditor's report on summary financial statement in any document that contains summary financial statement. So without audit report, you will not include audited summary financial statement. And the last one is agree with the management on the form of opinion to be expressed on summary financial statement. So form of the opinion, how the opinion will be issued again, because these are the special scenarios, and opinion which is required to be issued in these special scenarios have to be agreed well in advance. Okay. Now, in order to audit, let's say for example, we everything is fine. Now we have to issue a report. For that we need to audit. How to audit that? Simple. First of all, auditor is required to perform the following procedures. Okay. To issue an opinion, to base the opinion, and to collect the sufficient and appropriate audit evidence. Number one, auditor needs to understand whether the summary financial statement adequately disclose the summarized nature. So, this financial statement, detailed financial statement, is like summary financial statement is kind of reflecting the summarized form of a detailed FS. So, whether summary FS is appropriately reflecting summarization of audited FS. Kind of, you need to understand that. Okay, whether detailed summary FS appropriately reflecting summarization of a audited FS. So whether the summaries has been appropriately prepared, kind of. So evaluate whether the summary financial statement adequately disclose their summarized nature and identify the audited financial statement. So you can say whether summary has been prepared appropriately. There is one point here, that is identify that summary financial statement should identify the audited FS. Okay. Identify the audited FS. Now, where they are identifying, in our example, if you see, the summary statements are, let's say, over here. The restated consolidated summary statement on the company, its subsidiaries, joint venture, and asset for year end 31/3/21 annexed to this report prepared by the company for the purpose of inclusion in the RHP in connection to the IPO of the equity shares issuing equity. Okay. This is there. Then, yeah. The restated consolidation summary statement. Okay. The restated consolidation summary statement have been compiled by the management from audited consolidated statement of the group, its joint venture, and for the years ended 31 March 23, 22, 21, which were prepared in accordance with the NDS prescribed as per section 133 of the Act, read with the Companies Act, Companies Indian Accounting Standard Rules, and amended. Okay, and other accounting principles generally accepted in India, which have been approved by the board of directors on these dates. So this is the identification of audited FS from where the summary FS is prepared. So, identification of the audited FS from where the summary FS are prepared. Next is that when summary FS are not accompanied by the audited financial statement, then from where the audited financial statement are available, and if law and regulations specify that the audited FS need not to be made available, then establish the criteria for the preparation of summary FS. I'll explain you with example what that means. If you see over here, we were discussing about the restated financial statement. Okay, restated financial statement over here. Okay, on page 405. Now, if I go to page restated financial information, I'll show you one specific paragraph. In the audit report, means in the basically financial statement itself, okay, which will provide you how to obtain the actual audited financial statement. So first of all, they will provide you, the basis of, audited financial statement, like, when they were prepared, when they were approved. So identification of the audited financial statement. And then just a minute. Sorry, it's getting stuck. Just a minute. Okay, if you see over here that in accordance with the SEBI ICDR regulations, okay, certain financial information as indicated above in relation to our group company for previous 3 financial years derived from their respective audited financial statement are available on respective websites. So they provide that from where you can get that financial information. Our company is providing link to such website solely to comply with the requirement of the specified under SEBI ICDR regulation. Such information on our group companies, other information provided on our website do not constitute a part of a prospectus. So they have provided this particular, link that over here, like, from where you can get the information, financial information of different companies, and everything is given. Okay. So, like, they are specifying from where you can get this financial information, from where you can get this, information about the audited financial statement. Okay. And that is available on the website. So the way to get the audited financial statement, and that is also a requirement, okay, that when summary financial statement are not accompanied by the audited FS, then evaluate whether they describe clearly from where the audited financial statement are available. So they are describing it appropriately from where the audited financial statement are available. And if law or regulations that specify the audited FS need not to be made available with the summary FS, then establish that the criteria for preparation of summary FS is clearly described. So we also saw the criteria was clearly described in the summary FS. Okay, so when audited FS are not part of your summary FS, 2 things. 1, from where they can get the audited FS. Number 2, the criteria. The criteria should also be disclosed in financial statement, not on the audit report. Audit report is secondary, but the criteria should also be there in your financial statement. See, this is the criteria. Applied criteria. So the criteria is also there, from where the financial statement have been, summary FS have been derived, plus the link, or from where to get, basically. Then evaluate whether the summary FS adequately disclose the appropriate criteria that we have already seen. Compare the summary FS with the related information in the audited FS to determine whether summary FS agree with or can be recalculated from the related information. So perform a recalculation of the summary FS. Recalculation of audited FS to get summary FS. Again, evaluate whether the summary FS is prepared as per the applied criteria. In our case, it is SEBI listing agreement, some specific provisions. Okay, so we need to see whether that has been complied or not. Evaluate whether the purpose of summary FS, okay, whether the summary FS or contains the information necessary at appropriate level of aggregation, and if so, if not, then whether it is misleading, means whether the level of aggregation is appropriate, whether the level of aggregation is appropriate as per applied criteria, and evaluate whether the audited financial statement are available to the intended user of a summary FS without undue difficulty. So, like, if you check whether the link has been provided, whether the way has been provided, and that too without undue difficulty, then it is fine. Again, now coming to the part where I will discuss about opinion. Okay. Now, as we discussed, opinion, form of opinion can be of two ways. Either when it's a fair presentation framework, or when it's based on the compliance framework. Okay. If there is an unmodified opinion and not required by law, unless and until required by law, auditor can use any of the following opinion paragraph, like the summary statement are consistent in all material respect. Okay, consistent in all material respect. Or the summary statement are a fair summary of the audited FS. A fair summary. So either we are talking about a fair summary or consistent in all material respect. Just a minute. Oh, just a minute, it's stuck. Sorry. Sorry, apologies. It has stuck. Okay. So these are the two. Okay, it's now moving. Okay, so these are the two ways to present an opinion. One, the summary FS are consistent with in all material respect with the audited FS, or the summary FS present a fair summary. Okay. So if law or regulation does not, prescribe anything, or unless and until required by the law, the auditor can use any of the statement. Okay. So let's see in our example what statement has been used. If you see the opinion over here, just a minute, let me show you. See over here. Based on our examination and as per the reliance placed on the examination reports submitted by other auditor and an explanation given to us, we report that the restated consolidated summary on the group have been prepared after incorporating adjustment for regrouping reclassification to reflect the same accounting treatment for the year ended this, and there were no adjustment. There are no qualifications in the audited report on the audited consolidated FS of the company as on these years, and each year ended this which requires adjustment to the restated consolidation statement summary. There is an EOM paragraph 2 para 6A which do not require any adjustment to the restated consolidation statement, have been prepared in accordance with the ICAI regulations and the guidance note. So now here, if you see, the wordings have been prescribed by the law or regulation. That's why we are using the term that have been prepared in accordance with the ICAI regulation and guidance note, because this is not only summary, this is adjusted, restated, consolidated summary. So that's why the terminology here is prescribed by law, that has been given by law, the sentence of the opinion. So we need to use that particular form of opinion. So unless and until we saw that unless and until required by law, we are required to use, we can use any of the statement. But here the statement was prescribed by law, kind of B1. It has been derived from this particular part. If you see, the summary statement are a fair summary of the audited FS in accordance with the applied criteria. And if you see over here, have been prepared in accordance with this is applied criteria. And here, if you see, like they are talking about the readjustment and everything. So on the similar line, they have opted for the B1. But by adjusting a bit, because this is a restatement consolidated summary FS engagement. If law or regulation prescribe the wording of the opinion on summary FS that are different from described above, then the auditor apply the procedure discussed earlier, okay, to enable auditor and express the prescribed opinion. Means check whether can you express an opinion. If the wordings are prescribed by law, then whether law allows you to express an opinion, and evaluate whether the users of summary FS might misunderstand the auditor's opinion on summary FS. If so, whether additional explanation in the auditor's report can be included to mitigate the misunderstanding. So two things you need to check. But here, usually, when law or regulation prescribes a wording, there is a very less chance of a misunderstanding. Very less chance. Okay. So usually if the wordings are prescribed by the law, check whether you are able to issue the opinion in their wordings. If yes, is there any misunderstanding, chances of misunderstanding? If yes, then can it be mitigated? If yes, then mitigate. If no, then it's a problem. Okay. Any doubt till now? Any doubt? Any doubt? No? Okay. If no doubt, then let's understand the content of a report on summary FS. And we use the term report over here. Okay. Auditor's report on summary FS. Now, what are the elements that are required to be included in the report on summary FS? So, the elements are number one, a title. Okay. Title should clearly be there. Interesting. Then we have an addressee to whom it has been addressed, an introduction paragraph which identifies the summary FS. Okay. And title of each FS, including the summary FS. So let us see in our report. Yes, we have a title over here. We have an addressee over here. Then we have introduction paragraph, which has summary FS and audited FS both. So restated consolidation summary is your summary FS of the company subsidiaries. This is this. Okay. And then it talks about the identified the audited financial statement, which is below. They have identified it bit below over here. Audited FS. Okay. Then refers to the auditor report on the audited FS. Okay. And date of that report. So if you see, refers on the audited report of that FS. This is the reference to audit report on audited financial statement. Okay. Same way you have all the details on the audited financial statement reports. Everywhere you have a report and everything. So you have a report dated this, report dated this. Throughout the, they have mentioned. And the type of opinion also. Then again, it identifies the financial statement we have saw. Refer to the auditor's report on the audited FS. We have seen that. Okay. If the audited FS contains modification, emphasis, and other meta paragraph, then the fact that unmodified opinion is expressed on the audited FS. Okay. Or whatever kind of opinion is there. So if you see in our report also, if there is any emphasis or meta paragraph, other meta paragraph, then reference to that. So I'll just show you one place where there was emphasis of C qualifications over here. Qualification included in the annexures report, auditor's report, annexure to the auditor's report issued on the company's auditor. This is this. If there is any qualification, then reference to that qualification. And if there are no qualification, then accordingly nothing will be specified. And if there is an EOM or OM paragraph, see here, the auditor report on the audited consolidated FS of the group and its joint venture for the year ended 31st March 21 included the below EOM paragraph, which did not require any adjustment. So specifying the observation EOM or OM paragraph. Okay. Then when you are required to date, summary FS. So summary FS should be dated after the date of auditor's report on audited FS. That is for sure. That date of report on summary FS should be after audit report date on audited FS. Reason because till the time they are not, till the time audit report has not been issued on audited FS, how will you prepare the summary? So that's why summary FS date should be later than audit report date on audited FS. Then you need to include a statement indicating that the summary FS do not contain all the disclosures required by the financial reporting framework. Okay. Then if I show you this one, just a minute. Yeah. If you see over here, like, our report is intended for this purpose and our report should not be used for distributed other purpose. And if you see one more paragraph, I'll show you that they have been prepared. And, if you see this one, just a minute. Yeah. So here in the summary FS, this is the restated summary FS. That's why what you will see over here is they will mention that our work was solely to assist you in meeting the responsibility in relation to the compliance with the Act and ICAI regulations. Okay. So here they will specify that why the work was performed. Okay. Restatement and what was the purpose of the restatement consolidated summary FS. Kind of. Okay. So here they will not here they have not directly specified this thing, but indirectly that it does not contain all the disclosures which are contained by your audited FS. Then a description of the management responsibility for the summary FS. Okay, a statement on auditors responsible for expressing an opinion, a paragraph clearly expressing an opinion, auditor's signature, and date of audit report. So if you see in this example, this is management responsibility. Then you have an auditor's responsibility. Okay. Then you have a kind of, opinion, clearly expressing an opinion paragraph, which was here below. This is opinion paragraph. Then you have a auditor's name, signature, place, everything over here. Okay. So this is the way it is required to be presented a summary financial statement. Okay. And these are the minimum criteria established by SA 810. Now, as I said, if there is a modification to the opinion, emphasis of matter paragraph or other matter paragraph in audit report of the audited FS, then the same is required to be included. Okay. If auditor is satisfied that the same is required to be included in summary FS, okay, then auditor shall state that, that particular part in the summary FS also. But the auditor is satisfied that okay, the summary FS are consistent in all material respect, okay, or if they provide a fair summary of the audited FS in accordance with the applied criteria, then in that case they are required to contain the following: that the state of the audit report containing qualified opinion or EOM or OM paragraph, and describe the basis for qualified opinion and the effect on summary FS. Now, now the question comes is, can it be possible that if my audit report on audited FS is modified but summary FS is not modified? Yes, that is possible. Reason because let's say I have this is one audited FS 1, audited FS 2, audited FS 3. I need to summarize these three. Okay. I need to summarize all these three. Let's say this is qualified opinion. This is unmodified. And this is adverse. When I have to summarize, my management's objective is to show the real summary of these opinions. Okay, appropriate and fair summary. Okay, appropriate and fair summary we have to show. Although we have an adverse opinion, and if we can show fair summary of adverse opinion, why we have to qualify our report on summary FS? Understand, if your summary FS is appropriately reflecting the adverse opinion on one of the audited FS, and if the summarization is done appropriately, although you have an audited FS where there was an adverse opinion, but while summarization, I have done summarization in such a way, or management has done summarization in such a way that it is clearly reflecting the position of the audited FS. Again, the purpose of summarization is to show the position of the audited FS, not to amend the audited FS. The purpose of summarization is to show the real picture of audited FS, not to amend the audited FS. There is a big difference between both of them. If summary FS is clearly showing that the clear picture, fair presentation of the summary of all the existing audited financial statement in whatever condition they are, then the report on summary financial statement will not be qualified. When I need to qualify a report on summary FS, when the summary is not prepared appropriately, means summary is not reflecting my audited FS. I am not commenting on the observation in the audited FS. I am not here to rectify observation in the audited FS. No, that will be amendment of the audited FS. But while preparing the summary, if management has summarized appropriately, then I don't have an issue. And in that case, an adverse opinion of an audited financial statement may not impact my summary financial statement opinion. Okay, and as a result, if that is a scenario when your summary financial statement opinion is unmodified and your audit report contains, okay, audited financial statement, okay, contains, okay, a qualified opinion, other matter paragraph or EOM paragraph, but your summary financial statement are consistent and they reflect a fair summary of the audited FS. In that case, you are not required to qualify your report on the summary FS. Rather, describe the basis of the qualified opinion on audited FS and the effect of the summary FS, if any. That's it. So, again, I will clearly write it down. modification in audit report, audited FS, okay, will not impact summary FS if summary FS reflect fair presentation of modified or fair presentation of audited FS on which there was modified opinion. and if there is, the summarization is not done appropriately, then you can modify your opinion on summary FS. So if the summary FS are not consistent in all material respect or are not a fair summary of the audited FS, then you can express an adverse opinion on the summary FS. That is fine. Okay. Then you need to place a paragraph with respect to the restriction or distribution of use of the summary FS. Okay, when the use and distribution is restrictive, you need to include a paragraph, and that is here. Like in our audit report, that's a paragraph. Use and restriction one. This one. Last few points are there. One is the comparatives. Comparatives disclosed in the summary FS. If there is a comparative that is disclosed in the summary FS, okay, then we need to contain matters that are there in SA 7010. We need to include matters which are there in SA 710. And which are those matters? So if you go to SA 710, and if I go to comparative financial information or comparative financial statement, basically, this one. When a comparative financial statement are presented, auditor opinion shall refer to each period. When reporting on current period, if opinion is on prior period, so this is a requirement which we have already discussed in SA 710. Okay. When reference to a comparative financial statement is there, if this reference is there when we are issuing summary of more than 1 year or we are providing comparatives, either comparatives can be a corresponding figure or it can be a comparative financial statement. So you need to decide whether it's a corresponding figure or a comparative financial figure. It will be a corresponding figure if you are not issuing an opinion. Your opinion does not contain that particular year. But it will be a comparative financial information or financial statement when you are issuing an opinion also. So point 10.2 on 7.51 will be applicable accordingly. Page 7.51 of chapter 7. Okay, for SA 7010 will be applicable. So you need to understand whether it's a corresponding figures or comparative financial statement. And accordingly, auditor report shall contain matters required by SA 710. Next point is What if the audited supplementary information is presented with the summary financial statement? If the audited supplementary information, unaudited basically, is presented with summary FS, ask management to separate, differentiate both. Okay. Ask management to differentiate both. To change the presentation of unaudited supplementary information and clearly differentiate from summary FS. Ask management to differentiate both and ask management to clearly show that both are different. And if management doesn't do that, if management refuses to do, explain in your audit report on the summary FS that this information is not covered by our audit report. Next part is other information in the documents containing summary statement. It's same like, application of SA 720. If your document contains other information, then your job is to, identify whether, by reading the other information included in the document, whether there is a material inconsistency between other information and summary FS. So it's on the similar line of the SA 720. There is nothing much. So read the other information, identify material inconsistency between other information and summary FS. And if you identify there is a material inconsistency, then understand whether summary FS or other information needs to be revised. And accordingly, you need to take your actions. Auditors Association, very important part. Auditors Association means, let's say, for example, there is some information, okay, where management is planning to include summary FS, but management is not planning to include your audit report. Only management is showing that, this is audited information, but it is not including the audit report for whatsoever reason. Okay. Means management is showing that this is audited by this auditor, but without audit report, including summary FS, including summary FS stating that it is audited without attaching audit report. If that is the scenario, then ask management not to do that. Ask management that please include audit report also. Okay. Request management to include audit report in the document. If management doesn't do so, then auditor needs to take appropriate action designed to prevent management from inappropriately associating the auditor. So, if management still does that, you need to take appropriate legal actions then. And timing of, summary FS. Okay. Timing of summary FS and timing of subsequent event. Now, let's say, for example, audited FS were issued on 31/7/2023. Summary FS issued on 31/10/2023. Now there's a gap between these two. What about the events occurring between date of audited FS and summary FS? Are we required to include that in our summary FS? Answer is pure no. Because the moment you will include, this will become amendment to audited FS. So in that case, audited FS, sorry, summary FS will be, will become adjusted summary FS. Unless and until it is required by law to adjust, you cannot make a summary FS as an adjusted summary FS. No. When your assignment is only to prepare summary FS without making adjustment, you are not required to contain these things. And even, no law or regulations required to adjust for subsequent events after audit report. Subsequent event after date of FS. What if you are preparing a summary FS from the audited FS of, let's say this audited FS is of FY 21-22 and this was 22. See, and if you will consider the adjustment from 22 till 23, so many, it is just like, preparing new FS. That's why any event occurring after the audit report will not be considered in summary FS. Not even, required as an adjustment, because no law or regulation requires you to make such kind of adjustment. No law. Okay. And you are required to place a paragraph in your audit report that, this kind of subsequent events are not covered. So if I just show you, see over here, we have no responsibility to update or our report for the events and the circumstances occurring after the date of the report. No responsibility. So there is no responsibility after the date of the audit report. Clear? So auditors report on summary FS after the completion of audited financial statement is not required to obtain additional evidence on the audited FS or report the effects of the events that occurred subsequent to the date of auditor's report. Not required. Clear? Any doubt, guys, till now? Any doubt? Contents are, yes, similar on the line of the when you do audit of a normal FS, but bit tweaked to adjust on the summary FS. Any doubt, guys? No? For the next lecture, please read chapter 9. We will again, that's a new area for you guys. Revise this chapter in detail. Chapter 8 we have done completely. Kindly revise this chapter in detail. Come up with your doubts in the next lecture. We will also take up some questions on this particular topic, and accordingly we will proceed forward. Okay, guys? Okay. So if no further doubts, thank you guys for participating in today's lecture. I'll see you in the next lecture with chapter 9. Session done, sir. Thank you.